Welcome to KonceptCraft. Introducing the Accounting Arena book, your ultimate guide to mastering the fundamentals of accounting. Embrace the world of accounting knowledge at your fingertips. Act now, and get your copy of Accounting Arena ebook. Link is available in the description below. Keep learning. Keep growing. Happy learning. Now let's begin our today's lesson. The trial balance. The trial balance is a summary of all the ledger accounts of a business at a given date. It shows the debit and credit balances of each account and helps to check the accuracy of the accounting records. The trial balance is prepared by listing all the accounts and their balances in two columns, one for debits and one for credits. The total of each column should be equal, as per the double entry principle of accounting. If there is any difference between the two columns, it means that there is an error somewhere in the accounting process. The trial balance is not a financial statement, but it is used to prepare the financial statements, such as the income statement and the balance sheet. The trial balance also helps to identify any accounts that need adjustments or corrections before the final accounts are prepared. The trial balance is a report that lists all the accounts and their balances at a given point in time. It is used to check the accuracy of the accounting records and to prepare the financial statements. However, the trial balance can also be a source of comedy and confusion, especially when the accounts have funny or misleading names. Here are some examples of hilarious trial balances that you might encounter in your accounting career. Cash, $10,000. Petty cash, $100. Petty revenge, minus $500. Accounts receivable, $20,000. Accounts payable, $15,000. Accounts unpayable, $5,000. Inventory, $25,000. Inventory loss, $1,000. Inventory gain, $2,000. Inventory pain, $3,000. Sales revenue, $50,000. Cost of goods sold, $30,000. Gross profit, $20,000. Operating expenses, $18,000. Net income, $2,000. Net loss, minus $2,000. As you can see, some of these accounts are not very standard and might raise some questions from the auditors. For example, what is petty revenge and why is it negative? Who are the accounts unpayable and why are they not written off? How can inventory have both loss and gain? And how can net income and net loss be equal? The answer is simple. These are not real accounts, but jokes that someone made up to prank the accountant. The real trial balance is hidden somewhere else, and the accountant has to find it before the deadline. The prankster might be a colleague, a boss, a client, or even the accountant himself. The motive might be boredom, revenge, fun, or a challenge. The result is a hilarious trial balance that makes accounting more interesting and entertaining. The trial balance is a report that summarizes the balances of all the accounts in a company's general ledger at a given point in time. It is used to check the accuracy of the accounting records and to identify any errors or discrepancies that may have occurred during the accounting process. The trial balance has two columns, one for debits and one for credits. The total of each column should be equal, indicating that the accounting equation is balanced. If the totals are not equal, it means that there is an error somewhere in the ledger that needs to be corrected before preparing the financial statements.